Welcome friends to reading price action bar by bar part 2. Here I'll be talking about, we'll pick up some intraday charts on the fly and we'll see how we could have taken intraday trades using price action, naked price action. We've got just the moving averages and VWAP. If you see here, we've got the 920, 200 uh, or we can switch to something like, yes, we'll switch to something like 920, 50, 920, 50, 200 moving average. I'm going to reduce this and let's see. This is also flat for 26 March. I'm looking at Adani ports. So let's go and look at 22nd March. Could we have taken trades here? So we are at 5-minute interval. We have a green candle followed by a red candle, and you have another red candle below the VWAP, but it's taking support from the 200 EMA, and so it rises up here. But if you see here that the EMA 9, the 20 and the 50 are all jumbled up, and price is basically, and the averages are flat, and if you see very, very small candles, volume also is quite sparse here, and volume is also quite sparse here. So I don't think we can take trade in this situation. And now you have price, you have a red candle, then another small red candle, then price is not now coming down to 200, but buyers are pushing back. And so we have a green candle here. We have a green candle here on, and let's see what we have here. We look at 26 March. So 26 March, it's basically, let's go a little earlier. Let me add session breaks here. Okay. So 26 March here. You're looking at 26 March. Price goes up, crosses VWAP, and then again you have a evening star formation. Price again comes back, and then all the EMAs are basically bunched up together, small candles. So we wouldn't be taking any trade here because it's all messed up. This is basically such a big congestion, and the moving averages and VWAP is flat. So there is hardly any movement, and people who would have traded here, either long or short, would have basically got their SLs hit. And then all of a sudden, you have a consolidation breakout, and we wouldn't know that this is going to break out. So this is all in hindsight, and you've got a good volume of, say, around 6 times the volume, and you got 0.65% up. But you would not know that's going to break out here, right? So this again, this is basically hindsight. We're doing nothing here. And if you look at the remaining candles, then you have some sort of consolidation here again, then price going here, and again in a bunch, and then finally we are out before 320. Otherwise, our order gets auto auto cut from the broker side. Let's look at another chart. Not much movement here. Let's look at Asian Paint. Asian Paint on 26 March, you started off with a huge big candle, and then you have some sort of trading range where price has gone down. So you you have this huge big candle, and then you have a gap up, but it ends up being red bearish, and then you have another bear up, and then finally price goes below EMA 200 here as well. So, but there is a big spike here, and there is there is not enough indication for a clear trade here. If you see here, now hindsight is always 2020. I can tell you that this is closed here, and take a you can put in a stop order here and take one trade below the low, and there you can sell it here. But I don't want to do that. Let's be honest. You are only seeing this bar when it's forming, and this could be green for all you know. It just closed in the red, right? So if you look at it, the if you look at this bar, it is almost like open is equal to high, and the low is basically the close is just 1 rupee 5 paisa above it. So if you see here, there's a small wick here. Again, there's a big wick here. So not much going on here. And you have your first leg down. Let me get a hold of trend line. Mm. So you have something like a first leg down. You have first leg down. You have one leg down, and then buyers try to push up, but couldn't go beyond all the VWAP and the EMAs. And then you have another leg. Then you have another leg down. Here, you've got another leg down, almost sort of like identical if you see. Not exactly, but it didn't go up to that low. And then again, you have a green candle here. And since it's below the EMAs, you can't think of going long. Immediately, people who had gone long here would have lost their SLs because they would have kept their SL below the low of this candle, if at all. And you see this bearish candle that would have hit their SL and triggered further selling. And again, after this candle, there's another bearish candle, and then you have buyers trying to go up, sellers going down, buyers again trying to go up, sellers uh, pushing it down. There's nothing much you can do here basically. And if you see here, this candle is basically trying to test the low here, 2819.88, 2819.2. It's almost stopped just short of testing this. And then you have the bulls always trying to, take something back. So what you have basically here, you have a high here, first entry short, second entry short. So this is first entry long, second entry long, again jumbled up. There is congestion here. And the sellers, the bears have broken through this support, and you have a nice big doji here. And could you have gone long here? But you are below the EMAs, and if you want to go for a scalp, you could. But then, if you see the uh, the high here, there's very little room here. So I wouldn't. Although this is like now this appears on hindsight. Once you see this candle form, you'll say, "Oh yeah, this is a nice kind of morning star pattern." Or you've got a hammer candle, and after a hammer candle, especially at the end of a downturn, price will go up. Yes, it can go up, but it may not. So I wouldn't, because we are too close to the EMAs here. There's no clear direction. It's a bunch here, and then what we can do is you again have trading range here, trading range here. So and you have a nice long candle, first entry short, second wave short. Now, if you see here in this trading line, if in this trading channel or or, or trend channel, you have a green candle here, and then one leg, you have one leg of the sellers coming down here, and you wait and watch. The bulls went up again. Then you had another leg here, second leg of the you had the second leg I'm going to delete this so that it's clear. I'm going to zoom into the chart. I hope it's clear now. So you have your first entry shot, one leg down. Then you have your second leg down. And because it's close to the trend line, in fact, it's close to the trend line here, you can basically, uh, you could basically, since this is a rising trend channel, you could take an entry at this point here. You need not take an entry at over the high here, but you should take an entry at the low here because it's touching the trend line. That's a good rate to go in. Unlike normally what you have in a breakout, here we are in a trend line channel. So you are getting a good price. You go in here and the stop loss would be somewhere below this resistance here. Take into account ATR and how much you can, how much you will want to risk. Now the ATR is almost 3.9, and this candle itself, now that it's done, we can see it's 285. But if you see here, 30 paisa, 20 paisa. So this ATR basically is showing it in terms of rupees. If you see here, 265, 455. So average ATR over the last 12 candles is 4 rupees. You don't keep this ATR. If you're going in here, keep a small stop loss of 30 to 50 paisa, 30 paisa, 40 paisa up to you, and put in a buy order. If you're wrong and this candle while it's forming, it'll go down, hit your stop loss, either go up or continue to go down. Nothing in trading is a given. There's no holy grail. So remember, I'm repeating again. You are getting a price when it's touching the trend line, one area. Second confluence is you're touching the trend line here. You already made this trend line, got touches here. We are not. This trend line has not been drawn. I drew this trend line on the basis of these two touches. These candles have not come in, and these candles have come in. So this trend line good enough, and you don't keep tinkering with the trend line. Maybe a little, but that's in hindsight. When I see this candle, but right now we are not there. We are here. So take it here. Keep a small stop loss, and then once this candle is now green, we didn't know it. We came to know at the end of 5 minutes, and we made 285 here. Now up to you. You can bring your stop loss somewhere in the middle of the candle. You keep trailing uh, your SL, and then you can keep trailing it, and you can go up as much as you want. If you kept it here, your stop loss would get hit only here, and nobody in intraday trading waits that long. So people either want to take away their profit. If they are losing, they'll be very patient. But when it comes to taking profits, nobody's going to wait even for half an hour. They're afraid to lose the profits already shown in their P&L. So your position loss, people are not willing to, people will keep staring. So you can trail it here. Then you got another one, you can trail it here. Now you got a red candle, so you're here. So if you kept it here, you would have been taken out here. But still, you would have made some money. So all in all, good. So here we are at 12:55. We have a 10 rail channel break, and since we are breaking, we are going to test a new low here. So we are testing a new extreme here. We are going up, and then we have tested a new extreme here. So it's 3:15, and so much for this day, because 3:20 you have to basically square off all intraday orders by 3:19, or your broker is going to do it for you by charging you a penalty and then 18% GST on it. Now let's just pick up any chart, Coal India. Just want to pick up any chart. These are not cherry picked. We can choose some other day. Some day we can choose. Basically, just teaching you how to read price action bar by bar. So what day is this? This is the 22nd of March. Five, I mean, 5 days from today. So you have a green candle here, and you have a open low not equal, open high not equal, and your high and your close is not equal. So what you have here is kinda doji on both sides, followed by a bearish bar. Can't say bearish engulfing but it's basically an outside down bar. And then you have another doji here, which is taking support at the 50 with buying pressure here. Then you have another green here. First 15-20 minutes are very volatile, and unless you are a very, very good trader and you are into opening range breakouts of 1 minute, and you are able to punch in your orders and you're sure of what you do, I wouldn't trade in the first 15-20 minutes. I don't. I trade intraday when I get the time. But the first 15-20 minutes is a strict no-no because you don't know what's happening in the market, right? So while we are doing price action bar by bar, but it's also good not to trade in the first 15-20 minutes, because what happens is that you are going to get a sense, you're going to get orders, aftermarket orders and pre-market orders, and all that is going to play out, and it's all a black hole. We don't know those orders, so prices try to go up, the price come down, again taking support, again going up. Now, taking support here, should we go for a long here? No, we shouldn't, because this VWAP in the 9 and 20 are above this EMA 50, and they could act as resistance. If price is below the EMA or the VWAP, it will act as dynamic resistance, and if the price is above the EMA and the VWAP, it will act as support. So I wouldn't take a trade here. And you see here, it, it's okay. It's a good candle. There's some buying pressure here. Again, supported the 50 EMA 50 here, and hardly any wick at the top. So reasonably good candle. And but I would still wait and watch. So or you could have taken a buy here, and then if you put in a buy order here, you would have got filled here with this spike, and your stop loss would be somewhere here at this point. So it would not have been taken out. Up to you how you want to do it. This candle is good, but I wouldn't take a buy order. I wouldn't take a buy order here. I would still wait to see what's happening. So we have four inside bars here. There's the II, double I, three I, the four inside bars all within this range, and then you have a nice huge candle breaking out. And let's see the volume here. The volume is 2114. So the volume is just slightly above the 20 candle volume, but nonetheless, it's a good, strong, huge bar, and it's it's given us 0.44. Assuming that you didn't put in a buy order here and you didn't rush with the market order in the middle of this candle forming, because you never know. This could start as this started off here, and then it shows like it will go up, become green, and it can become red, or it can become very big green, or it can become a doji. You never know. I'm analyzing this chart. Basically, in hindsight, this has already taken place. So I can talk a lot of nonsense and it will make perfect sense to you. But nonsense is nonsense. And just because it makes sense does not make nonsense into complete sense. So we don't know this candle. Remember this. Whenever anybody is explaining a chart to you, especially a chart that is not live, the candle is not running, please don't accept any explanation that anybody gives you without thinking it over. So we don't know what this candle, I'm here at this moment. Like I told you, I'm going to explain you bar by bar. Now whenever my cursor is here, in reality, my frame of reference is the last candle. The candle before it is where I am, and I don't know this candle, what this candle will bring, whether bill, bear, doji, whatever it is. So we have congestion here, and we have a lot of inside bars, and finally a breakout, but a breakout could have gone either way. So we got a huge big candle here, and now that I see that the volume is above the 20 bar volume, I can choose to go long at the close here. I can choose to go long here, not above the high. I'm saying the close here because we have already decided to go long, and we have already covered quite a lot here. So there is no point going above the high. If this was a swing trade, yes, I would definitely tell you to keep it above the high, because you're not watching. You are not going to be watching the market unless you're a full-time trader. Most of us will be working or have a business or something. So if this were a daily candle, 500% always above the high. I'll not tell you to put it at the close. There is a benefit to above the high, but that's for another video and in another playlist which I have, which is for swing trading. Since we are intraday here, you can buy here at the close here, and your stop loss will be below this candle low. Now this you buy here, that's a 1.90 uh, SL, and if you see the ATR is 130. So you can even decide to keep you can keep it at the open 430.70 and 430.60, not much difference. You can decide to keep it as 130. So if you entered at 430 to 60, you can keep it as 431.30. 431.30. Let's put a SL here. Let's make this red. You can go exactly at 180. Yeah? This is one of the methods. Okay. And I'm going to write stop loss at, what was it? Let's see. And I'll bring this up. Okay. So stop loss at 431.30. So you entered here and your stop loss here, and you would have been in the trade for this period of time had you not moved the stop loss till it got hit here. And you will not do that because this is intraday trading. And since you see that the price is going, once you take an entry here, it is advisable that you get out as soon as you see the first red candle closing, or you can wait for a candle close below EMA 9. Up to you how you want to trade, but then you've lost 70, you lost 1 rupee 65 here, whereas you would have lost only 25 paisa here. First red candle and you run like hell. Run like hell meaning you even if your stop loss is not hit, you can either trail your stop loss to the low of this candle, low of this candle, then low of this candle, then low of this candle, and then get taken out here or here, or you can keep your stop loss here and then either trail it, or you can get out as soon as this candle closes, you immediately get out, executed market, or 5-10 paisa above the prevailing rate, whichever is preferable to you, so that you are out and you save some profits. Now after this, what do we do? Assuming that there is nothing that you've just taken one trade for the day, you still love this chart because you made money in this chart, you want to continue watching it. So you have your one leg down, push up, then you have your second leg down. But again, EMA is flat and prices are just bunching around couple of inside candles, and then price is meandering around here, and it's managed to go below the EMAs, and then it's gone up. Again, here there's nothing to be done because these are all very small candles, and if you see here, there is no clear indicator here, indication that there is some strong movement. The volume is fine. The volume is 139, which is above the 20 bar volume. But the fact of the matter is that looking at this congestion, you don't know what's happening. So you can wait here because if you are taking something at over a high here, you don't know whether the price will go up or it will just keep going up and down and up and down. So you have you have a you again have a gravestone here, although it's not the top of selling pressure here and a bearish candle, not a good sign. Then you again have a small candle here, and basically it's All it's a reasonably good candle, a small wick at the top, and then again you have a red candle. So this doesn't give me any confidence. So I would not like to trade here. Otherwise, you're just basically gambling. In stock market, intraday trading or swing trading is not gambling. There are you have your entire lifetime ahead of you, hundreds of charts, hundreds of patterns, and you have hundreds of bars to analyze. If you're not feeling confident, don't get forced into a trade because you say no. I have to take at least 4 trades a day. If you don't get anything, sit on cash. Cash is good. If you don't trust me, just switch up CNBC TV 18 and you'll find how many companies are sitting on thousands of dollars of cash and they are not merging or acquiring any company till they find a proper suitable fit. So if they are not expanding organically, they have to do it outside, but they prefer to sit on cash. They don't indulge in FOMO and buy anything or any company in their field just because it's sick or if they're getting it at a cheap valuation. So you have to wait for your time. Now, this is also a good candle here. Then again, you have a doji bar here. Now, this doji bar is almost touching the EMA 9. So this one is basically respecting the EMA. You could have gone high here at the top of this because your SL would be very low. Your SL will be just below EMA 9. Not here. Your SL would be somewhere here. Small SL, and you can go above the high. And if it comes down, hits your SL, so be it. And you're going gone, 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 gone. From here, 433.38, you've gone, 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 433.38. You've gone up almost 2 rupees. And then as soon as the first candle close, and adios amigos, you'll you punch out. Or if you trail your SL right up to here, you would have gone here and lost some money. That's okay. See, with this trailing method, sky is the limit. With a fixed stop loss, again sky is the limit. But what if it hits your SL here? You lost all the money which you could have saved, right? So, what is the best policy? You have to decide what is best for you. Again, a small evening star, an evening star at 2:30. If you tell anybody in your family that I saw an evening star at 2:30, either they're going to take you to optometrist or they're going to say that you've lost your mind. But since this is a stock market and we've all lost our mind since we are here in the stock market, at least that's what some people think. This is an evening star, and down we go here, and then again back, 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 back. So if you really can't do anything, it's gone down here, and since this is closed, if it's closed below the EMA, okay, you wait for confirmation. Then this could be a signal candle, and again, since it's close to the EMA, you take a short below its low, and your SL will be here, and you made some money, and then as soon as you see a green candle going up, you can cut your you can exit your position. And then, of course, we have to be out now because it's 3:20. And with that, I hope you learned something about analyzing charts bar by bar. And I'll continue making more videos on this so that you guys can gain an in-depth understanding of reading price action, naked price action, rather than relying on indicators like RSI or MACD. And when I talk about analyzing bar by bar, it's just not bar by bar. It's support and resistance, trend lines, patterns, all sorts of stuff. The whole thing, but without relying on indicators too much. If you like this video, please subscribe to my channel and press the like button, press the bell button to get notified of new videos. Please forward my videos to friends who are interested in learning trading. And basically, I hope you got value. Wish you all the best. Good trading and good profits, and I'll see you in the next video. Thank you for watching.